on Business Incorporated today. Algeria to cut subsidies on food, fuel, and electricity. The 6th Global Business Forum Africa begins in Dubai. Electricity interconnection between Europe and Africa is set to begin tomorrow, Thursday. Hello and welcome to the program. I'm Ini John Mekwa. Well, as usual, let's kick off the program with a midweek edition of the market numbers, starting from Africa, where investors' sentiment were mostly positive at intraday. Nigeria's main index rose higher by 0.38% as it's crossed into the 41,000 level. And that's at intraday. Very impressive. We hope that is sustained. While South Africa's JSE dipped 0.53%. Egypt's EGX 30 was also positive at intraday. It was up 0.38%, while Kenya NSE closed Tuesday's session positive. Moving on to the Middle East now, trading was largely positive also, as well, except for Dubai. Abu Dhabi index, which was negative. The Abu Dhabi index fell marginally, 0.01%, while Dubai's index gained 0.04%. Perhaps the influence of the forum going on there. That was as intraday. Elsewhere in the region, Saudi Arabia and Qatar indexes rose 0.5% and 0.07% each at intraday. For Europe, it was a subdued start for the European markets as global trade remains volatile amid uncertainties over inflation, economic growth, and surging energy prices. To give us details from that region, we have Christy joining us from Frankfurt. Hello, Christy. Good afternoon. Christy, are you there?
Hi, yes, I'm here.
Okay, cool. So today, the European Union presented a toolbox of measures that its member states could consider using to help protect households and businesses against skyrocketing energy prices, which has been a talking point in Europe for a while now. What strategies were proposed? What strategies do they have to use?
Sure. Well, what we saw in the toolbox they presented today, or I should say one message that came out that was very clear, is that the European Commission was recommitting to its investment in green energy, basically saying that, part of the reason we're seeing these high energy prices is due to a shortage of coal and natural gas, fossil fuels. But still, they reiterated the fact that they see investments in renewable energy as the most stable path forward for Europe in terms of energy supplies and also for prices for consumers. Now, as for strategies that they presented as to how they might help these high prices, or help consumers, I should say, they were both short and midterm options they offered. These included, for example, offering aid to low-income families in the form of vouchers and also in the form of energy tax breaks. There was also the proposal that they could defer energy bills and talk about also state aid for certain businesses and industries in the EU. And interestingly, they also proposed that the EU could focus on increasing its strategic energy reserves, which is really taking a page out of the US's playbook. So the next step will be that the European Parliament and European leaders will meet this week and next, and will decide how they want to move forward.
And if EU countries start reining in prices for businesses and consumers, where do they plan to get the money to make up for the high cost of the energy?
Yeah, it's a great question, and there was not a lot of clarity about this yet. Of course, the main focus we've had is on how our consumers and businesses going to pay for this. So the state is, of course, jumping in. Now, the EU made it clear that member states would have access to the European budget as well as the COVID-19 relief funds to help them pay for example, renovating residential and commercial buildings to make them more energy efficient. But this is more of a midterm solution. As for concrete concrete short-term solutions, we could look at Spain, for example. They recently introduced a special tax on utilities companies. This tax is basically designed to keep these firms from making what Spain sees as excessive profits when energy prices are high as they are now. So the idea is that this tax could help make up for money lost by offering a tax cut to consumers, for example. But interestingly, several European companies, or European energy companies, I should say, have come out publicly against a similar measure on an EU level or outside of Spain, I should say, saying that it's just too painful for them, they can't afford it. So there seems to be real concern from energy companies that this kind of tax situation could be something that member states are considering.
And this, of course, relates to the International Energy Agency's annual report, which is out today, saying that the switch to renewable energy is going too slowly, especially, in the midst of the high cost of energy. We see a switch. Some other countries like China embracing coal even more. Now, what does this mean for countries that are further along in this transition line, like Germany?
Yeah, that's right. I mean, basically what the IEA has said is despite the fact that 2/3 of the world's population lives in emerging and developing markets, only 1/5 of global investments in green energy actually goes into these markets. So this latest report said that 70% of additional spending on the green energy transition needs to go to these markets if the globe is going to achieve the sort of goals it set out in terms of slowing climate change. Now, the report, or I should say, a report released a few months ago by the IEA went into how this could look. They said that the private sector is going to play a huge role. Of course, there is actually a huge investor willingness and a lot of capital that is available to go towards this kind of investment. The people that want to invest in the green transition, but that has been very much targeted in developed markets like Germany, I should say. So what they suggest is that there needs to be a concerted effort from governments like Germany to have a public messaging and encouragement for investors, also using their own financial mechanisms to get the money where it needs to go. These markets actually represent a huge investment opportunity, but investors are a bit uncertain about the payback at this point. So they basically say states need to encourage this if we're going to reach these goals.
All right, Christy, thank you so much. Well, the switch is a very interesting one at this time with the skyrocketing prices of energy and gas. Enjoy the rest of your day. So let's move on now to the UK, where this morning we started a discussion on the compromise on Brexit protocols to help circulate goods between Great Britain and Northern Ireland. We have Juliana to bring us up to date on what's going on about that. Hello, Juliana. Good afternoon.
Good afternoon, Annie.
Yeah, so we started this conversation this morning about the Brexit protocols and, trying to resolve it. Has the Prime Minister said anything about this?
No, to just say pretty bluntly, no, he hasn't said anything, Guinea, and that's because, as I was been saying, the Prime Minister's on holiday. The Prime Minister is on holiday in, I believe, Menorca. He's actually been pictured painting in a £25,000 a week condo. So no, he's having, if you support him, a much needed break. But of course, if you're the vast majority that are not very happy with the way things are in the country at the moment, you're not happy that he's away. I don't think there's a good time for a Prime Minister to go away. And unfortunately, we're not going to have an update, anything concrete really, on these Brexit negotiations. We did obviously have a little bit of breaking news this morning, which was, for the first time in a long time, the EU finally said that they were willing to tweak bits and pieces of the withdrawal agreement, which unfortunately Britain haven't been sticking to because the Northern Ireland Protocol has caused lots of problems between Great Britain and the Northern Ireland. To avoid having a border in the island of Ireland, Boris Johnson painfully agreed to put a border down the Irish Sea. Obviously, this wasn't popular by unionists, but apart from the politics, it hasn't been good business business. There have been so many border frictions between the two sides. It's costing business a lot of money. They've been pushing forward plans to basically make sure the deal was going to happen. And alas, the EU have said, right, we are going to have a relook at this. So this is likely to be months and months of negotiations, as have all Brexit issues. But yes, no word from the Prime Minister just yet, Inni.
All right. Well, we'll wait for him to come back from the holiday. And this morning, we also talked about the growth rates, which was 0.4%. How's the market reacting to this?
Yes. Excuse me. Yes, there was a 0.4% growth of GDP in the month of August. Growth is great. So the FTSE did spring up a little bit, particularly the pound. The pound's been rallying over the past few days. It certainly did so once those GDP figures came in. A little bit short than what economists had expected. They expected at least a 0.5% pickup. We didn't get that. As with all data that comes from the Office for National Statistics, we're really looking in the rearview mirror. We're not looking at what's happening at the moment. In the summer, of course, it was warm. Pingdemic had finally been put to bed, and people were out and about spending money on British beaches. So the services sector really picked up between about 8.5 and 10.3%. Now that the furlough scheme has come to an end, and now that people are really starting to see supply shortages, and it is affecting a business, are we going to start seeing this in the final quarter? The most important quarter, of course, because we have Christmas at the end of the year. That's what a lot of economists are waiting to see. The numbers, the FTSE All-Share is up by 0.03%. The FTSE 100 is down by 0.14%. And the FTSE 250 is up by 0.94%. In the currencies market, the British pound is up on the US dollar by 0.31%, up on the euro by 0.03%, and up on the Japanese yen too by 0.27%.
And a worse than expected trade deficit at 3.7 billion pounds in August from 2.9 billion pounds in July. Well, this shouldn't come as a surprise. I mean, we have a lot of disruptions, COVID and other disruptions.
Yeah, absolutely. As you said, there's been a widening of the trade deficit over the past 3 months. It's now widened to about 6.6 billion pounds. This is actually the first time in 3 months that it hasn't decreased. And as you said, there have been so many disruptions. Not only are we struggling with supply issues because of COVID-19, Britain have been dealing with, you guessed it, Brexit. And there are so many issues as it pertains to trading, imports, exports. There was lots of momentum at the beginning of the year when Boris Johnson's government was kind of, going everywhere around Asia to Australia, trying to sign these new trade deals. But we haven't really heard anything apart from Australia over the past couple of months. So business confidence is at a real-time low, especially if you're into big business and you are trying to export beyond the EU. What are the rules? What is it going to cost you? Things are not exactly clear. And I think that's really been reflected in these numbers today. And of course, as we saw, I believe we discussed this last month, we are starting to see German trade start to decrease. And Germany was one of Britain's biggest trade partners for a long, long time. So trying to find new trading partners and trying to increase that revenue is going to take some time. Perhaps when Boris Johnson gets back from holiday, this will be one of his top things to do, Inni.
He certainly has his hand full before he comes back. A lot of things are waiting for him. But thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
So let's move to the United States now, where stock futures were about flat early today as investors anticipate the start of earnings season and the new inflation report. Dow Jones Industrial Average futures added 13 points, while S&P 500 futures gained 0.2%, and NASDAQ 100 futures rose 0.49%. Well, to give us a little bit of how it went yesterday, we have our correspondent in the United States, Maria Bird.
The U.S. stock market fell for the third straight consecutive day on Tuesday. The NASDAQ, S&P 500, and the Dow Jones all have taken a major hit. Crude oil has seen its highest revenues since 2008. It is clear the supply and demand for oil is great in the U.S. U.S. ports, though, are sitting with many goods waiting for distribution. This will drastically impact the supply chain in the U.S. Corporations are looking to see what the earnings will be as they enter the fourth quarter and are expecting that inflation will have a major impact on the horizon of the U.S. economy.
Well, we'll take a break now. We have a lot of conversations waiting for you on the other side. This Stay With Us is Business Incorporated on Channels Television. You're welcome back. Well, the International Monetary Fund yesterday, after the meeting, cut its global growth outlook on worries of supply chain disruptions and cost pressures that are holding back the global economic recovery from the pandemic. We have our correspondent there, Chimezi Obiwago, who's been there for some days now. She joins us now to give us some of the details of that. Hello, Chimi. Good to see you again from the U.S.
Good to see you, Edie. Good morning from here and good afternoon.
Good afternoon from here, yes. So the IMF has lowered its global growth forecast from 6% to 5.9%. What are the key implications here for the global community?
Well, the IMF has a message for the global community, and what they are saying is that there is need for each country to ramp up vaccination of their populace. They are seeing the Delta variant as a big risk for economic recovery going forward, and they're seeing this COVID-19 as endemic. It seems this has come to stay, and the only way for the global economy to deal with it is for a lot of people to get vaccinated. So they are asking that the global community should step up their vaccination and ensure each country should try and ensure that they vaccinate their population at least 40% this year and 70% next year. They also talked about the rising inflation that we're seeing globally, and of course the issue of supply chain bottlenecks. These are some of the risks that they are seeing, and they are asking the Monetary Policy Authority to work a fine line between targeting inflation, tackling inflation, and of course, supporting the economic recovery. And on the fiscal space, they are saying that healthcare is key, and that governments all over the world should ensure they prioritize healthcare funding. And coming down to sub-Saharan Africa, of course, that report showed that sub-Saharan Africa is expected to grow 3.7% this year and 3.8% next year. And they are seeing a big challenge for sub-Saharan Africa. And one of the challenges there is the low vaccination in sub-Saharan Africa. In fact, according to IMF, the sub-Saharan Africa needs about $200 billion in funding for their economic recovery drive. And that's a big challenge. And that brings to question the issue of debt, which is, again, they are seen as a risk that the rising debt crisis in sub-Saharan Africa, a lot of countries there are really entangled in a rising debt. And then they're also calling on wealthy nations that benefited from the SDR, those of them that can do without the SDR, they can actually channel their own monies to some of the poorer countries that need those funding. Now, for the details of the factors that will drive sub-Saharan African growth, the director Africa Department, Bebe Selesi, will be given a breakdown of that. That should be sometime next week. They will give us those breakdown on the factors that would drive the sub-Saharan Africa. Well, that's basically what they are trying to tell the global community at this time.
Yeah, and it's day 2 of the meeting. What's next on the agenda?
Well, today, this morning, the fiscal monitor was released, and it noted, I talked about the issue of the debt crisis. The Fiscal Monitor report that was released today noted that the pandemic, has led to an unprecedented increase in debts issued by governments all over the world, non-financial companies, and even household. And a strong message from the Fiscal Monitor this time, I'm going to quote what they are saying, that fiscal credibility pays off. Countries that have credible fiscal framework benefit from better and cheaper access to bond market. So they're saying that that's fiscal credibility. That's a precious asset any country can actually have. So when you have, during the time of uncertainty and difficulties as the global economy is facing now, you have fiscal credibility. Of course, you can be sure you will be able to assess funding as well as watching your rising debt. That is also key. Again, at about now, the president of World Bank, David Malpass, is speaking currently at the annual meeting opening press conference. We're having an opening press conference, and here today we're going to learn that there is more behind the numbers in the World Economic Outlook that was released yesterday. Also, the IMF Managing Director, Kristalina Georgieva, will also be briefing on the global policy agenda, what they have towards global economic recovery. More importantly, there will be a fireside chat with the central bank governor, Nigeria Central Bank Governor, Mr. Godwin Emefiele. That would be on Friday, and I believe that that event is going to offer the central bank governor an opportunity to actually explain and answer some of the questions in the minds of many concerning, particularly we've been talking about the issues in the exchange rate. So I guess that's an opportunity for the central bank governor to explain what exactly is going on in the exchange, in the foreign exchange market, not just to the Nigerian community, but also
to the world. Sure, Chimi, we're certainly looking forward to that. I mean, a lot of ES itches when we hear the foreign exchange management and all that. But anyway, do take care of yourself, and we'll talk to you later.
I will. Thank you, Ini.
Yeah. So we move on to the UAE now. The United Arab Emirates account for 88% of investment from the GCC to sub-Saharan Africa, and that was between January 2016 to July 2021. That amounted to about $1.2 billion. And this is the 6th edition of the Dubai's Chamber of Global Business Forum Africa. So Africans are meeting with the UAE business community. We have our correspondent there, Mayowa, who has been covering the event because of the time. Of course, they had started long before now, but she gives us an update of how the event went earlier today.
Been delayed for well over 1 year, Global Business Forum Africa returns for a 6th edition as part of the Expo 2020 Dubai. Now, delegates have come from across 55 countries, over 3,000 of them registered for the event that is themed Reset, Restore, Renew. Organizers, that's Dubai Chamber of Commerce, say their aim is to deepen the ties with Africa. They're also looking to open new doors of opportunity on the African continent to Dubai-based investors. Now, in an interview with Channels Television President and CEO of Dubai Chamber of Commerce, that's His Excellency Ahmad Bouamin, did share more on their interests in the continent.
We are committed. This is what I want to say. This is the 6th time we are organizing this event, and we are showing our commitments to the African continent, to our friends and businesses from Africa, and we'll continue to do so. One thing we talked about in the past, but we believe we'll talk about even much more going forward, is the digitization. We think this is what will be a big opportunity in Africa. We believe that Dubai can add a lot into this in terms of partnership in this area. And we want to continue, of course, talking about trade now, With the free trade agreements in Africa, we believe this can open a lot of opportunities, not only for Africans to trade among themselves, but for investors to come from overseas and look more seriously at Africa. In terms of infrastructure sectors, still we are committed to bring investments in the areas that we believe Dubai can add value to. Our chief of ports indicated how he sees Africa, to continue to see Africa as a land of opportunities, and we are also bringing some international investors within the same investments. In terms of the other sectors, tourism, financial services, logistics, we still believe these are sectors of great interest for all of us.
Well, staying in Africa now, Algeria plans to start reducing subsidies on food, fuel, and electricity as the OPEC nation looks to cut billions of dollars in spending. The country also has plans to increase investments in its oil and gas sector by $2.6 billion next year to boost production by 8.9 million tons of oil equivalent. Oil and gas investments in 2022 will total $10 billion, and that's up from $7.4 billion this year, aiming to increase output to 195.9 million tons of oil equivalent from 187 million tons of oil. Algeria, which relies heavily on the energy sector, last year have planned investment spending in oil and gas to $7 billion. And now the first electricity interconnection between Europe and Africa in the southeastern Mediterranean region is set to be signed tomorrow, Thursday, after an agreement of the electricity interconnection between Greece and Egypt. And this is set to improve the region's security of electricity supply, increase cross-border energy exchanges, and also enable further development of renewable energy sources. That's it on the program today. Thank you so much for being a part of it. I'm Ini John Mekwa.